My Way Home Live. I'm your host, Josh Lewis. We have a couple of very special guests. For the second time in the last 3 or 4 weeks, we've been joined by the founder and creator of Find My Way Home, Scott Shang, my business partner in both Bywise Mortgage and Find My Way Home. And we have the brains of the operation, at least on Scott's side. And that's Cozy for those of you watching at home. And then we're also joined by one of our mortgage experts in the Find My Way Home Expert Network, Benson Pang. Benson, you are at Nest Made. Why don't you tell us a little bit about yourself, both history, how you got in the business, and how you found your way here to Find My Way Home?
Yeah, well, thank you so much for the intro. I am Benson Pang, broker owner of Nestmade Mortgage. So, been in the business for 10 years. Before I become a mortgage broker, I was actually a civil engineer. And right before I actually switched careers, I got my PE license and got the whole certificate. Everyone's like, "What are you doing? Why are you switching?" And here I am 10 years later, being in one of the most elite group, findmywayhome.com, giving my expert knowledge, sharing my expert knowledge. Actually, I met Scott through a group of elite loan officers. Just what a pleasure to be with in that group. And after knowing Scott, the way I got introduced to Scott is always trying to find ways to help different homeowners, help situation, understand like, hey, you can actually get a loan. Maybe not now. Let's get you prepared, right? And I feel like I share that same philosophy, and that's why it drawn me to findmywayhome.com. It's something that I want to share my knowledge with. If it's not now, we can get you prepared.
Perfect. So tonight we're going to talk about a topic that, Scott, you said something earlier, like, hey, this is basic. This is Loan Officer 101. And to a degree, it is. But what I find is all of the time talking to clients, they don't know some of the simple ones. We're going to get into some creative ways of funding your down payment and covering your closing costs. But some of these are basic, but they're not fully and well understood by most buyers. And let's be realistic about it. Buyers don't buy a home twice a year. They don't buy a home twice every 5 years. For most people, it's about every 6 or 7 years they go through the process. So it's every time is like the first time. So with that in mind, if you're looking to buy and you're wondering what all of your options are for funding both your down payment, closing costs, and prepaids, we're going to kick it off and go through that. So why don't we start with the first and most obvious one?
Yeah,
Scott,
yeah. Well, before we get started, what I also wanted to say is this is also the single biggest hurdle for renters wondering whether or not they can buy a home, because especially right now in most of the country, you could buy for paying the same amount for a mortgage that you can for your rent. But you have the security when you're an owner of fixing that payment over a 30-year period where your landlord could raise your rent next year, and then it's more expensive than if you would have bought a home this year. And right now, as we're recording this, interest rates have gone up a little bit, but they're still historically really, really low, and you can still buy a home and make that payment. But that hurdle is that down payment, right? It's the how do I pay for the down payment and the closing costs, because that's the challenge that a lot of renters have is, I don't have a huge amount of savings and I don't want to put it all in, and how am I going to do it? And so that's what we're talking about today, is kind of some creative ways that, you don't have to have a pile of cash laying around. We've got 10, some obvious and some pretty creative ways to come up with that money to get yourself into that home. So take it away.
and what we should be able to follow up with next week is how much it takes to get in, because that's another big misconception. Not only where do I get the money from, but how much money do I have to have? I had a client today, they have 20% down, and he says his final words were, well, and that's good because you have to have the 20% down to go with a conventional loan. I said, no, you actually don't need 20% down. So it's probably another really good topic for us to cover: the different loan programs, what minimum down is, what closing costs are, what prepaids look like, so you know what does the dollar amount look like and how much you need to get in the home. Scott, kind of going back old school, the start and the genesis of Find My Way Home, we used to in California have a lot of down payment assistance programs. So there's a lot of content on the website about these now defunct down payment assistance programs. So we have this conversation a lot because people reach out asking about such and such program that no longer exists. So basically, that's what we're going to go through for you guys tonight. Is just a quick run through all the ways that you can fund your down payment. So
and if you are watching this live, you can ask your questions either on Facebook or YouTube, and we'll get those and we'll answer your questions for you.
So starting the easiest and most obvious one, your personal savings. Whatever you have in your checking and savings, we're going to go, if you have mattress money, cash on hand, we'll get to that in a minute. But the first few are pretty easy here. Funds that you have. And Benson, what percentage of your clients would you say just have their money sitting in personal savings versus having to go to some of the other options that we're going to roll through tonight?
Oh, it's very. Earlier you mentioned about like the percentage of down payment, right? You can actually go as low as 3% for a down payment in California, in some counties, right? And they don't know that they actually already have that down payment in their bank. So when we're talking to them and we're talking about down payment amount and we go over their bank statements and there you go, you already actually have that money in the bank. I would say a good 60-70% of the people that I talk to have already saved up that 3 to 5% down payment.
And it's the most common. It's pretty rare that someone comes in with no money of their own. They at least have some personal savings. So what I would say, number 2 here, is also very common: gift funds. Benson, why don't you tell us a little bit about gift funds, which programs allow it? Do you have to have any of your own funds, and what that looks like, the extra hoops you might have to jump through if you're trying to use gift funds?
Yeah. So the most common loans that we're talking about is conventional loans, right? Conventional VA loans, FHA loans, they all allow gift funds when you're buying it as an owner occupied. So you're buying it. So if you're going out there buying a house that you're going to live in there, gift funds are allowed, and gift funds are allowed to a certain extent. So some lenders might have an overlay where you have to bring in a certain amount of, maybe minimum of a couple of percent of down payment for yourself, or some lenders can allow you to go up to 100% of the down payment as a gift funds. So typically I see that the gift funds are coming from relatives or boyfriend, girlfriend, fiance. But typically these are relatives that are providing this gift funds.
Absolutely. And there's a few additional steps you'll have to do. You'll have to complete a gift letter. Some programs will.
All right. Well, Josh is working on that. I actually wanted to go back one step. Benson, you talked about in your savings account, there's a term called seasoning, right? And so usually the bank, usually the lenders, when they're going to ask, for what? They ask for a couple months of bank statements, right? What are they looking for?
2 months of bank statements, or they're looking at 60 days prior to your earnest money deposit. So they want to see the history, the transactions that leading up to your purchase transaction.
And they're looking for large deposits. So sourced and seasoning is a really important thing when we're talking about any sort of money for down payment and closing costs. And so that'll come up a few times during this. Josh, do you have you back online?
Well, the best part is this thing's been plugged in all day, and somehow it still thinks it's out of batteries. So we're gonna have a fun little orange cord hanging over my sholdder. But What we were saying with the gift funds, you'll need to have a gift letter that explains that relationship that Benson was talking about, that has the contact information for the gift donor, that says where they're getting the funds. Now, on conventional loans, you don't always have to provide the source of funds. You can wire directly into escrow, and that shows the source of funds. Other loan types are going to actually require your gift donor to prove that they have the money to give it to you, much along the lines of what Scott was saying in terms of source of funds. They want to make sure that we're not bringing in unusable funds and just saying, oh, here, it's a gift from someone who didn't actually have it to give. So your loan officer will walk you through all of that fun stuff.
An
Now,
experienced loan officer will walk you through that. What you want to be careful of, and this happens all the time. Yeah, my mom just gave me a check and I deposited it into my bank, right? Or she gave me a stack of cash or something like that. If at all possible, and you know, we're going to say this over and over again, if you're working with, and this happens a lot with inexperienced loan officers in call centers and these big, you know, big national call centers, if you're trying to push a button, get a mortgage, you could get bad advice, or more likely not bad advice. Sometimes it's bad advice by exclusion, right? They don't know you, they don't know what to tell you or how to advise you to when you're doing this. But if you have the ability to have the person who's gifting it to you wire it directly to escrow or to the closing entity, if you're, you know, not in an escrow state, right? Then that's usually the cleanest way to do it, with the least burden to the person that's giving you the money. Because I mean, let's face it, it's, you know, it's hard to ask for money. And so you want to make it as easy on them as possible. And I've seen it where they'll gift you the money. They say they'll gift you the money, and then the paperwork, you know, requirements start coming in, and the person giving you the money starts getting a little nervous, and they're like, well, I don't want to give them this, and I don't want to give them my bank statements. So, you know, Josh, what's the best way to avoid that?
it's not always avoidable. FHA is going to require that you show the donor's ability to gift. So it's something that we want to talk about and address up front. I had that conversation with a client on a deal about 2 years ago, and we get to closing and dad wires the money into escrow, and we say, where's the statement? She says, oh, he won't give it to me. I said, well, when were you going to tell me this? So we talked to him, get him on the phone. He says, I'm worth millions. You don't have the right to see my stuff. And I don't remember exactly how we worked through it, but we did end up getting something from his bank stating that he had the funds and it had been in there.
Love your daughter, don't you?
Yeah, no, the guy was just a monster pain in the butt. But it's one of those things where again, you tell the people up front, but obviously in that relationship, she was happy to get the money and didn't want to upset dad. So we got to do it.
Yeah, sounds like you were in my transaction a couple of years ago. Same thing, same exact thing happened. Dad didn't want to show bank statements, and it took a couple of days for him to sit and really think, like, should I give them the bank statements? And finally he gave in.
Well, and most of the time they're concerned about their privacy, and they're afraid who's going to see it, and all these things, and so most of the time it just requires an education, but nobody likes surprises, right? So if you're getting gift funds, make sure you have that conversation with your loan officer. Explain to them that you have gift funds. Ask them, will anything be required from the person giving me the gift? If you can address that up front, then that gives you a little bit of time to schmooze mom and dad and make them feel comfortable. And a lot of times you get them on the phone with Josh or Benson, and they're going to explain it and say, no, we're not posting this on the internet and disclosing your assets to the world. This is private, and this is why we need to see it, and nobody's going to access your accounts.
No, it's very important to let the gift donor know, look, if you don't want the donee, the person you're giving the money to see it, that's fine. Send it directly to me. Fax it. Securely upload it. And we're going to send it to the lender, and it's going to go to the underwriter, and it's going to go into the file. No different than if you yourself went to get a mortgage. I'm sure you've got a mortgage before, right? And you had to give bank statements, correct? Yeah. So the only thing you could be worried about is your daughter seeing your bank balance. And we can absolutely assure you that's not going to happen. And sometimes that works, and sometimes you get difficult people who don't want to listen to logic. So let's look at number three. This one, easy in theory, not as easy in the real world. Cash on hand. In some communities, it's very common to save money at home and not trust banks as much. So some loan programs are going to allow this. It can be cumbersome. It can be difficult. So before maybe I turn it over to Benson to kind of walk us through that a little bit, the easy button here is if you have cash at home and you need to use it for closing, if you put it in the bank and it's there for two full cycles of statements and you don't see the large deposit, it's essentially seasoned. Most people, if you're thinking of buying a home, can foresee that situation and work around in that way. But there are people that are like, nope, I'm keeping my money at home. So Benson, let's say you're doing an FHA transaction for someone and they need $22,000 to close, and they've got $1,800 in the bank and $22,000 under the bed. How does that work?
Well, I would definitely don't deposit it now when we're in the middle of an escrow, right? We're not in a position for you to put it into the bank and have it seasoned. You can't season something in the middle of an escrow while you're under contract. So typically we would advise them to talk to a family member and get it as a gift. Get gift towards your closing costs, get gift towards your down payment. In fact, for the down payment, one of my clients, this is a few years back, what he does in our community, they like to take money out as soon as they deposit their check. So they go work at a job, they get a paycheck, and then they bring it to the bank and get it cashed. They then take the cash and put it under their mattress.
Mm.
And this went on for 3 years. And that's how he saved up $72,000 towards his down payment. So when I asked him, okay, so how much do you have in the bank for down payment? He said, nothing, but I have $72,000 in cash. And we all know what industry, handle a lot of cash. And he is not in an industry that he handles a lot of cash. And I said, how do you do that? How do you have so much cash? And that's how he explained to me. And I said, well, go deposit it into the bank because I can't use cash. Escrow is not going to allow you to bring a suitcase worth of cash and go, hey, here's my down payment, right? You need to deposit the money in the bank, wait 2 months, and then you can have it seasoned, and then you can wire the money into the escrow.
And again, this goes to, and this is kind of the mantra that we are always doing here at Find My Way Home, is if we see this all of the time, and you talk to real estate agents, and they get a pre-approval letter from somebody because you called some internet bank and you just said, oh, I have $70,000 down payment. Cool, here's your pre-approval letter. Let's go make an offer on this house. And nobody's asking questions and nobody's verifying anything. And that's the challenge that you have. And that's why it's important that you're working with somebody who's a professional, has been doing this a long time. Do not let anybody make an offer for you or have you go out shopping for houses if they haven't asked you for those bank statements and where's the money coming from and verified your employment and run your credit and done all of these things, because this sounds silly to me and it sounds obvious, but consumers don't always know that. They just know, wow, that was the easiest experience I ever had. I didn't have to do anything. I just called and they sent a letter to my real estate agent. And that could put you in a whole heap of trouble if you got $70,000 making a lump in your mattress.
And I get a lot of some real estate agents will come up to me and say, hey, how come that lender doesn't have to ask so many questions? Why do you have to ask so many questions? Why do you need all that documents, right? Well, the last thing you want to have the home buyers to experience is, hey, they walk up to a home that they really, really, truly love, right? Their whole family, mom, dad, daughter, sister, brother, they all went to go look at the home and, oh my God, we all fell in love in it. And then you guys get into escrow and then you don't qualify for a loan. We can't use your assets. We can't use your bank statement. Like any of that one thing in the 400 boxes that we have to check, any of that one thing doesn't work out, you don't get a house. So get yourself pre-approved, get your clients pre-approved with a real like mortgage broker who is going through all the boxes and make sure they are qualified before taking them out to go look at homes.
So let's look at the next option here. It's using your 401k, your retirement accounts. 401k is an easy one, and we get this question a lot. Can I and then should I use money out of my 401k or an IRA? So these are going to vary. Your 401k, you can borrow up to $50,000. It's the max you can borrow from it. And borrowing from it, to me, is a good way of accessing the funds. Taking a distribution from it when you're not of retirement age is a not so good way of doing it. You're going to pay taxes. It's going to get added to your income. You're going to be taxed. You're going to be paying a 10% penalty. So you worked so hard to save that money in your 401k, and you're basically burning a big chunk of it. So borrowing from your 401k is good. IRAs are a little bit different in how they work. One of the best is a Roth IRA. If you've been saving in a Roth IRA, you can pull the contributions out, not the growth of the money you put in there, but your contributions you can pull out. So to me, I like these options. It's your money, you've saved it. And if it's a 401k and you're taking it as a loan, you're going to pay it back to yourself. So you're not giving anything up. You're just basically getting the benefit of those funds to get you into a home before you've been able to save enough in addition to those funds.
And that money continues to work for you in your retirement plan.
You're still getting interest. You're paying yourself interest on it.
And the best part is if your employer is matching your 401k, they're basically contributing towards your down payment.
All of that, and again, you're saving pre-tax, so you can save a little faster in there. I mean, you are going to have to repay yourself, but it's probably the fastest way to accumulate the funds to get a down payment. So let's look at the next one. This only applies to business owners, but most people don't know, or they're not exactly aware of what they can do. In most loan programs, you are able to use funds from a business account. You're going to need to get with your CPA, most likely, and get a letter that states that using the funds from the business account is not going to have a negative impact on the liquidity and the cash flow of the business and its ability to function. This one doesn't come up a lot, but we do use it. Do you come across this very much, Benson?
Yeah, we come up. The biggest hurdle that we go through with this business account is when the CPA is too busy, or the CPA might have to charge $1,000 or $2,000 to get this letter. And some CPAs just flat out don't write any letters. So make sure you're talking to a CPA that is going to be able to write this letter way before you need this letter.
Now, Josh, is there challenges with I'm going to transfer the money from my business account into my personal account? Is that cause any challenges beyond just having to paper trail that you have that money in there?
It's not any different than any other loan. You just now have two issues. You have to prove that the business can function without those funds and that you have the access to them. And you have to source them. So it's just an extra complication. So again, like we talked about with the gift funds, easiest to wire them directly into escrow, easiest once you've sourced with your business bank statements to wire directly into escrow there as well. So the next two, the next one, let's just roll it out right here. This is an interesting one because people are going to go, what are seller concessions? I've never heard of these things. Used to be incredibly common in the last 2, 3, 4, 5 years. Like Benson, when was the last time you saw a transaction with a seller concession? Not after the fact. I mean, in the upfront contract, we see it a lot where the seller will say, "Hey, I don't want to do the repairs. I'll give you a $5,000 concession." I mean, we went in. I said, "I'll pay you $500,000, and I want a $5,000 closing cost credit."
It's been a while. It definitely has been a while. I mean, you see it more often after you get into contract, after you see repairs, but that needs to be done, and you ask for concession, but not upfront. You're not going. It's been a long time.
And I don't know, like for me, I couldn't tell you when it was. It's been long enough that I couldn't tell you, probably 3 to 4 years ago. But I did have this conversation just this morning with someone who watched a live I was on last night. She reached out today. She's in Northern California wanting to buy a manufactured home. It's in a high fire hazard area, so it's fallen out of escrow a couple times. It was a flipper that flipped the manufactured home. She says it's beautiful, but it's $270 a month fire insurance for a $220,000 manufactured home. So we went through it, and she says, here's what I want to do. So this is actually going to combine number 4 and number 6. She says, I have the money in the bank. I don't want to use my money. She says, I've already checked into it. I can get a reasonable loan from my 401k. So there's my down payment. And I'm going to ask the seller to pay all of my closing costs. And she says, I think they'll do it because they've already had to cut the price twice. They're a flipper. They're sitting on this. And we'll see. We're finishing the pre-approval. They're going to write their offer, but she may be able to pull off both seller concession and ending up getting a 401k loan. So we didn't really actually define what a seller concession is, but it's fairly self-explanatory. In your offer, you ask the seller to pay the closing costs for you, and you may say, why would a seller do this? The seller really cares about the highest net that they can get for their home. So if the home's worth $500,000, we'll appraise for $500,000, but they're only getting offers for $490,000, and you say, I'll give you $500,000, but I need $7,000 in closing costs, you're going to net them $493. So they say, why not? So the big issue on the seller concessions is, will the property appraise for the purchase price? And are you still able to net the seller the most money when they give you this money back at closing? And people will often ask, well, how do I get the money? You don't get the money. It comes out of the seller's proceeds, and it is escrow just moves it. They debit the account on the other side for the seller, and they credit your account, and you bring in that much less at closing. So the next one here is a lender credit. And this one, a lot of people just absolutely don't know about, and it's been much more common the last few years, especially with rates low and sellers not giving concessions. Benson, why don't you walk us through what a lender credit is and how it works?
Yeah. So when we're giving out an interest rate, right? And a lot of people, when we're talking about interest rate, people are thinking about, oh, I need to get the lowest interest rate. Well, the reason why people naturally is drawn towards that is because they're driving down the freeway, right? They're seeing the billboards that's saying this incredibly low interest rate. And when we're quoting a rate, we're talking about 0 points, right? At par. You don't have to pay any dollars towards that interest rate. But when you're driving down the freeway going 80 miles per hour, there's this fine print underneath that amazing, attractive interest rate. It says you have to pay 2 points and you have to be at 50% down, whatever that is, right?
820 credit score.
820 credit score. Exactly. Like a unicorn, right? Yeah. So for us is we always have to battle that up front and say, hey, we actually can offer the same rate, but it doesn't make sense for you to buy the points. And what you can do is go with a 0 points. But little people know that you can actually go the other way, which is getting a credit towards a closing cost. So let's say if your interest rate is, let's say today at 5%, right? 5% at par, meaning you're not paying any points. And you probably see it on billboard 4.75 and you pay 2 points. You can actually go up the other way and say 5.25 and you can get maybe a couple $1,000s towards your closing cost. And a lot of times when we are working with clients that is only doing 3 to 5% down, that closing cost means a lot to them, and giving them that credit and they're able to pay the monthly payment versus getting the credit, it's incredible. And just to give you an example, for each, I was just telling someone, each $10,000 in points that you're buying, you're basically saving. You're the other way. For each $10,000 credit that you're getting, you're basically paying $100 more in monthly payment, which will break even in about 7 years. So,
well, here's another thing that I want to bring up that's important is both 6 and 7, the seller concessions and the lender credits can only be used for closing costs. those cannot be used to pay your down payment, right? Gift funds can, all of the other ones that we've talked about can, but credits from an interested party or credits from the seller or from your interest rate can only be used for the closing costs. But like you said, Benson, when you've got these, when you're doing the home readies or the home possibles at 3% conventional or 3.5% FHA, and the consumer, the home buyer, has the down payment, but they don't have the closing cost, that's a really, really smart, good way to do it. You take a little bit higher interest rate. Yes, your payment is a little bit higher, but it covers all of those closing costs, and it secures you, and it gives you that home, and you start building that equity, creating that generational wealth, and locking in your payment for the next 30 years. And it's a trade-off. It's a trade-off, and advertisers, sometimes it's not paying 2 points. Sometimes it's a 6-month adjustable, right? And it's like, oh, I heard I could get an interest rate for 3%. Well, you can, but then after 6 months, it's going to adjust, or after a year, it's going to adjust. And there's all these different things. So you don't always have to take the lowest rate. That's kind of the beauty of working with somebody like you guys that have been in this business forever. I haven't done loans in a couple of years, but I did for 20 years. And you're all the time, especially first-time buyers. This is one of the more common conversations that we'll have with first-time buyers, that money is tight.
Yeah. And one of the cool things to note here, as the market maybe becomes a little bit more normal and you might be able to get a small lender credit, you can combine these. You can get a small seller concession. Yeah. You can combine a seller concession and a lender credit. Say you have $10,000 of closing costs, you can get a $5,000 seller concession, $5,000 lender credit, and end up coming in with only your down payment. So that's a really good option. And one of the things I get asked really often on this is why would a lender do this? Why would a lender give me money? Say, as Benson was saying, there's a par rate on any day where they don't charge you points and they don't give you a credit. So in the example where someone wants to advertise a really low rate, they say you have to pay 2 points. Well, why would the lender take a really low rate? Well, because you're giving them 2% of the loan amount up front. They're getting prepaid, so they'll take less over time. What you're saying when you want a lender credit is, I'll take a higher rate. I'll pay you more over time, but I want that money up front from you for me doing that. So it's a trade-off. You're taking a slightly higher monthly payment for not needing to come in with nearly as much money at closing. So the next one here, as we transition to it, Scott, I'm gonna roll this one over to you because you had, at the start of Find My Way Home, really had seen many of these programs and talked extensively about them. So tell us a little bit about employer assistance programs and how they work.
Yeah, employer assistance programs are tricky. But a lot of times bigger employers, they have programs. Now, here's the criteria. So an employer assistance program is that your employer will give you money for down payment to help you buy a home. Because obviously employers, especially big employers, they want their employees to live close, right? Because it's loyalty and they can stay close, so they want them in the community. That was usually the common thing. But what we would run into is you have the small business owner that runs Joe's plumbing shop, and he has 5 employees, and he's like, sure, I'll give you $15,000. It doesn't really work that way. In order to use an employer assistance program, it has to be documented in the employee manual, and it has to be available to all employees. It can't just be you're friends with the boss and he's gonna lend you the money. That's a gift, and not all programs are going to allow you to get a gift from somebody who's not related to you. So if you're using an employer assistance program, you want to check your employee manual, check with HR. It's rare that you're going to see an employer program if you don't have an HR department. It's usually a benefit that a larger company will provide to its employees.
And most times, if you're eligible for it, if you're at a company where it's available and you're eligible for it, you'll know. These people always tell us, I'm eligible for this. It's
Yeah.
not a secret just because it's such a cool benefit. Number 9 here is an interesting one. Sell personal property, stocks, metals, and crypto. We're going to leave crypto for the last part, but let's take an easy one like personal property. So let's say that Benson has like a sweet 97 Supra from like the awesome one from Fast and the Furious, and those things have gone through the roof and they're worth like $200,000. And now he wants to go buy a house, but he doesn't have any money, but he's got his Supra. We can do that. He can sell it and he can use that money. But what's important is the asset. We have to be able to show what the value is. And the reason why I use something crazy like that souped up 97 Supra is that it can be difficult to prove what one is worth. The last 5 auctions, one might have gone for 125, one might have gone for 195, and another one might have gone for 275. So you have to be able to prove that what you were paid was reasonable. You have to have a bill of sale. You have to have value, some type of valuation on it, and you have to prove that you received the funds. But if you have assets that can be valued, you can absolutely liquidate those assets.
Well,
So
appraised and appraised too, right? I mean, you have to be able to prove the value, is what you're saying.
yes, exactly.
Yeah, I
And
think
sometimes it's not an appraisal. With metals. I mean, we know what the price of gold is. So hey, I had 10 ounces of gold, and we know what the price is today. That's easy enough for us to document.
Yeah.
That 1997 Supra, not a super liquid market. They don't publish in the newspaper or on Google every day what one of those is worth.
But it can be anything, right? It can be a boat, it can be a car, it can be an antique cabinet or something like that. But again, as you get things that are harder to prove what they are worth, but that's an important part of it.
It cannot under any circumstance be your spouse. You cannot sell your spouse to come up with the down
You
payment.
can't sell your kids.
No kids.
I have too many.
I personally would never sell my dog, but I do have a client currently who sells dogs for a living. It's not his dog; he sells dogs. So lots of those things. So and the reason why we kind of leave crypto off on its own, it's so new that most of the loan programs don't have guidelines for it, and the prices, it trades 24 hours a day. Yes, you can go to somewhere like Coinbase or one of these other exchanges and see the price at any given moment. But it's a tough one. Benson, have you had a client use crypto in any way for a closing that they hadn't already sold and seasoned before?
We actually have one recently that we were trying to use the crypto, liquidate the crypto. However, the one downside of it is how do you provide bank statements to show 2 months that you've owned this crypto, because they don't have bank statements, or even if they have statements, it might not have a certain thing that the bank needs, which is maybe your name, or it might be missing your name. It'll have your wallet number, but it doesn't have your name because the crypto doesn't belong to you. It belongs to the wallet number.
So the best advice with crypto is if you need to use it for your closing, treat it like your cash on hand and get it somewhere, convert it into dollars and into a bank account as early as possible in the transaction. So the last one here, this one is Scott's favorite one. He likes his big tax refund every year. And he waits for it and then figures out whether he's going to go to Tahiti or whether he's going to get a new Maserati or whatever he's going to do every year.
I'm just here reminiscing of how many years it's been since I've seen a tax refund. I've been self-employed my whole life. I think maybe when I was a teenager, maybe I got one. No, it always goes the other way. That I am always cutting checks. But yeah, this is a good one. And you know what? I always end up writing an article or doing a video right around tax time. Right in the beginning of the year, and I'm saying, hey, when you got that tax refund, tax refunds are considered source and seasoned. So you just have to show that you got the refund from your tax return. Also, if you get an insurance claim, like inheritance is another one that we didn't put on there. But like an insurance claim or a lawsuit, you just have to show the court documents that say that you received this money as a part of a lawsuit. But these funds can be used without. I don't know if I'm misspeaking here, Josh, but I'm pretty. Especially tax funds are considered seasoned, but I believe insurance and lawsuits and things like that. If you just show that you were legally awarded this money, that it is considered sourced and seasoned.
All of the things that you mentioned here, and I was going to throw in a divorce settlement, but that's just another version of a lawsuit. As long as you can document that you were awarded these funds were owed you, and you received them from the source that was supposed to pay you, they are immediately usable. So those are the things that you're looking at with those. So, sort of in closing everything up, you guys, I'll give you each a chance to kind of say anything that you want here. But circling back to what we said really early in the show, work with an expert, work with someone that is asking you a lot of questions up front. My job on the front end is to ask the question, to discover the question behind the question, to make sure that your process of buying a home from the financing side is a non-event. You can worry about the appraisal. You can worry about whether it's going to pass inspection. You can worry about whether the seller is going to act right. You should not have to worry about the loan. It's because we've gone through all of this before you even went out and started looking. We know you have usable, good funds to complete your transaction. Like, this is amazing. Like, Benson, you won't be amazed at this, but we talk to people all the time that have talked to other lenders. One of my calls today, they said, yeah, the guy pre-approved us for $580,000. Cool. And what was the rate? It was 4.75. It was an FHA loan. It's not a great rate, but it's not a terrible rate. I said, okay. So did you go through what your monthly payment is going to be and how much cash do you need to close? Oh, no, he didn't tell me any of that. So what we're talking about here is what are the acceptable sources of cash to close, but it's important that you have an accurate calculation of how much cash you're going to need at close. Otherwise, you can still find yourself in a pickle with that. So again, work with an expert, go through the process and be guided by them. So I don't say call and talk to the first person, but make sure you're looking at their Google reviews. Make sure they were referred by someone. Make sure you get a good feeling from them in that conversation, that they're asking the right questions, that they're listening to you and picking up on the things that you're telling them, and that they're giving you the information that you need. So on this topic, that's all I have, gentlemen. You got anything else, Scott, you wanted to go through?
Thank you, Luxury Card Store, for the kind words. We really appreciate it. And it's funny that there was a time when there was a ranking of most trusted professions, and loan officer was right about there with used car salesman. And right around 2008, it kind of flipped, right? We got the number one spot as the least trusted profession. But and that's actually when we started Find My Way Home. That's when I started Find My Way Home. And my goal has always been to bring people like Josh and like Benson together onto one place where consumers can, when you go to the website, you're going to see Benson's telling stories about helping clients and sharing his experience and his expertise on video. And the same with Josh. And you get to know these people, and they're here to answer your questions. And again, Benson said this: if the loan officer is not asking questions, if they're not checking the 400 boxes, you think it's tedious. This is the one time that you're going to have to do this, but you get to walk away with a home. We have to do this every day we come into the office. We're checking these 400 boxes and making sure that we don't miss anything. And it's a complex thing to buy a home. But when you're working with an expert and they're doing all the homework, I always say the harder that it is up front, the easier it's going to be the rest of the process. And nobody likes surprises. And that's why we ask you all these questions and we dive in deep and we're asking, it sounds like we're running you through the gamut here. But there's a reason for it. And the reason for it is because we want you to enjoy the experience so much that you tell everybody that you know that we did a great job. That's how most of us make a living, is that we do such a great job that you tell everybody that you know and you send them to us, because we're trying to protect you from these big box lenders and these call centers that literally, like, if you see a commercial for a lender online, these companies literally spend billions of dollars a year to convince you that the way that you purchase the biggest and most important thing in your life is that you fill out a form on the internet and you end up with some kid in a call center in Detroit somewhere reading off of a computer screen. And that absolutely freaks me out. So I appreciate, you guys that are on here and anybody that's watching this. This is why we do these things. We don't want to scare you away, but we want to prepare you for what this process is, and make sure that you can get matched with somebody that you can feel confident that they're going to guide you through that process.
No, 100%. Benson, we'll give you sort of final thoughts here before I close it out. Anything else, either just on sourcing funds, anything in general you want to share?
Yeah, just to piggyback off of Josh too. Like, I actually have a client who VA veteran came in for a loan, and apparently she has already been pre-approved by some big box lender that is also veteran friendly.
That's a funny one, Benson.
Because she already banks with them. But it's an easy way to get the pre-approval letter. And they said, okay, great. Like, what are you shopping for then? Like, why are you coming to me? Well, shopping for rate. And I was like, okay, what rate did you get? And then she's like, oh, I don't know. Okay, what is your monthly payment? I don't know. What is your cash to close? I don't know. Like, so what do you know about this loan? Oh, I got a pre-approval letter to buy XYZ amount. And then I'm like, oh man, you haven't talked to the loan officer since then? Nope. Haven't talked to a loan officer since she got the letter. I'm like, okay, let's get you a real pre-approval letter. So it's just the importance of working with someone who can give you a clear mortgage plan, right? I think it's, at the end of the day, it's, let's get all the documents in, get all the boxes checked, right? Like, if you're using a 401k towards your down payment, get the 401k withdrawal form ready, right? And we're like, if you tell us what you're doing, we can walk you through what documents you need to provide any of the last 10 ways that we talked about getting financing from. So I think that's very, very important. And one of the things, lender credit is something that I practice what I preach. When I bought my house in 2015, I got all the lender credits to cover all my closing costs and my impound account and my prepaids. Man, that was good. You know what's so good about it? 6 months later, rates dropped. I just refinanced myself into a lower rate. So guys, it's something that we went through and we experienced, and we're trying to help you. We're not trying to sell you anything that we wouldn't do. It is something that we absolutely would go through ourselves.
That's super important. And the reason, again, sort of in closing here, we've talked about the importance of working with experts. We went through a topic tonight, but working with an expert that's going to make you comfortable. So shopping is never a bad idea. I tell people, hey, if you want to shop me, I want you to do that, because you're not going to have this conversation with the other people that you call. So, and if you do, if you talk to someone that you think is even better, then you're in good hands. The people that I see that get themselves in the worst pickles are the ones that went with the easy button. The first person they found, the person they found online, and then halfway through the process, or worse yet, 2 days before closing, we hear from them, can you fix this? You're like, no, you're 2 days from closing. I can't fix this for you. So long way of saying, that's why Scott created Find My Way Home. That's why we have the expert network. That's what everyone is here for. So if you need help, if you want a second opinion on your loan, if you have a loan estimate, if you're in process, reach out. The Find My Way, findmywayhome.com. We have an entire network of experts. We have someone who is licensed in your state who can look at what you're dealing with. And I'll tell people straight up front, if you're getting a good deal and you feel comfortable with someone, I'm not going to try and take the deal from them. I wouldn't want someone to do it to me, and I won't do it to them. You know, if you have reasonable rate and fees and you're in the process and you're happy with the person, close the loan. But definitely reach out and get the peace of mind. So hopefully that's what we can give you here. Hopefully we've given you some of that tonight. If you're watching this live, if you're watching this later and just diving into sources of funds, but we appreciate you watching either way, and we hope to see you out at findmywayhome.com sometime soon. All right, have a great night.
Thanks, guys.
Thank you.